Hello, everyone, and welcome to Fundera's live Q&A session on Paycheck Protection Program loans. We host these every Tuesday and Thursday to keep you updated with any changes to the program and also to give you an opportunity to ask our loan forgiveness expert and Senior Director of Finance, Justin Ridgely, any questions you may have. I'm Shannon Smith, part of Fundera's webinar team, and I'm hosting this webinar alongside Justin. Thank you to everyone who's joining us today. And please remember to submit any questions you have during the webinar by using the Zoom Q&A box. You can also submit questions ahead of time by filling out the Google form provided in our follow-up emails. If there are any questions we don't get to today during the webinar, we'll include them in our next session, which is this Thursday at 1 p.m. ET. In the meantime, you can find our team on Twitter or email support@fundera.com. As a reminder, we will be sending the recording, slides, and additional resources from our blog in our follow-up email today. With that covered, I'm going to kick it over to Justin Ridgely, Fundera's loan forgiveness expert, who will walk through any new information about the program.
Thanks, Shannon. Typically, we do these updates at the beginning of these webinars. This time, not so much to talk about. One change that happened last week was, more centered around, applications to the PPP program and not forgiveness. The SBA released a slightly updated application form on Friday, and I've highlighted kind of the one main change here was that, previously, if you had a felony conviction in the prior, 5 years, you were prohibited from applying for PPP. Now that it is kind of changed to 1 year, and then only if you have a financial fraud crime or felony in the last 5 years does that 5-year period still apply. So basically, for people who had some sort of felony on their record between 2 and 5 years ago, you now can apply for PPP where previously you couldn't. But there haven't been any big updates for forgiveness. There's been, some talk in Congress about what details to release about PPP program recipients. There's, kind of pressure from some people to say, well, we need to release, every borrower who got these loans, which is a typical requirement under all other SBA lending programs. But then, the pushback there is there are people here that you can deduce, what their income is through this, especially if you're a sole prop. So it looks like there'll be some sort of, compromise maybe down the road where, confidential information will be shielded, but probably some sort of list of borrowers will be disclosed due to SBA rules. Shouldn't really impact, most people too much, just hoping to see that, that privacy is protected in some way, especially for the smaller borrowers. But besides that, no big updates to forgiveness. We're still kind of waiting, for the SBA's revised forgiveness application after the PPP Flexibility Act was passed. It changed the 8 weeks to 24 weeks and the 75% to 60%. We haven't seen a new forgiveness application yet there, so there's still some outstanding questions until we receive that along with an updated rule. So with that, Shannon, I think we can go straight into Q&A and spend most of our time there.
Thanks, Justin. So we'll get started with the Q&A now. We'll go over any questions submitted ahead of time using the Google form first, and then we'll move on to any new questions that come in today. Please remember you can submit questions you have during today's webinar by using the Zoom Q&A box. So our first question is from a freelancer that is set up as a single entity LLC. They got their PPP loan via the net income shown on their 2019 Schedule C. They say that they deposit their income into their business checking account, which is then immediately transferred into their personal checking. They want to know if they were to do the same thing with their PPP funds, would that be considered satisfying the payroll expense? And could they do that at 100%? If so, would they have to transfer everything at once, or do they need to transfer partial amounts over time to match what their average monthly income was previously?
Okay, so a few points there in that question. If you are someone in this boat, I think the setup here that's been described, where you have a business account and you then any income you earn goes there, and then you transfer that to your own personal account. I think that is actually a very good way to do this. And if you're set up that way, I think that we hope, will prove to be adequate in terms of the SBA's guidance. I think, doing it that way shows a clear paper trail of, you've received money from, whether it's revenue or in this case, the PPP loan, it goes to your business account and then you pay yourself out of that account. And there's a paper trail of that, those transfers. As far as when you pay yourself and how much, there's no clear standard here, though I think it's slightly safer to pay yourself, more of a salary than it is to give yourself, one lump sum. Theoretically, you could do one lump sum, but I think it may just, look better, quote unquote, to do it in, installments. But there is no real guidance on this. I just think it's a slightly safer way to do it, and kind of looks less like a lump sum kind of bonus, even though that's really not what it is at all, and the timing shouldn't matter. As far as, what or how much of that you can use, I think the question made reference to 100%. Yes, you are able to use, those funds to pay yourself 100% of the loan proceeds, as long as we get clarification on one specific rule. And I think there's a few other questions that we received as well that kind of hit on this point, which is when the program was limited to 8 weeks only, there was this limitation on what self-employed individuals could pay themselves, which was, I think 15,385 as, if you made over $100,000 in 2019, or if you made less than that, then the equivalent of 8 weeks of whatever you made in 2019. That was kind of, the minimum of those two numbers was what you could pay yourself during the 8 weeks. Now with the program going to 24 weeks, logically what it should happen is that this should be expanded out from 8 weeks to 24 weeks, meaning you should have no problem, paying yourself 100% of your loan since it was on 2.5 times average monthly payroll. But there has been no specific guidance on whether that, 15,385, which is essentially, 8 weeks of $100,000 pay, pro rata, is now being lengthened as the max, to around, I think, in the $40,000 range or $43,000, which was the equivalent of, 24 weeks of pay at that level as the max, or 24 weeks of your equivalent for 2019. We haven't received confirmation on this yet. I think this is one of the main things we're waiting to see in the next application, hopefully, that we get from the SBA. It's hard for me, and this is just my personal opinion, to see how this restriction would stay in place because, regular employers with multiple employees can kind of, pay people far more than that 15,385, over 24 weeks. And it would seem grossly unfair to hold, self-employed individuals to that same standard. So, I think cautiously, I would say you can expect to be able to pay out 100% of your loan in payroll over this 24 weeks, as long as you kind of meet those two thresholds that I just mentioned.
Great, thanks for going over that. For our next question, a participant would like to know, will any funds that are forgiven be considered taxable in 2020?
As of the IRS guidance currently, yes. There was a rule put out maybe a month and a half ago by the IRS that said, yes, this counts as any forgiveness amount will count as income. There was some outcry from, some certain legislators and others that said, this is unfair. This is kind of not in the spirit of forgiveness. This kind of, it will actually end up reducing your forgiveness effectively because you have to pay taxes on it. But right now, this is still the rule we have. So I would say, yes, the answer is you will be taxed on that as the rule stands presently, but I think there's a good chance this will get changed before 2020 taxes are filed.
We do have a few questions about sole proprietors next. The first of those is from a sole proprietor who wants to know if they can pay themselves over 24 weeks, not salary, and account for this as income after the 8 weeks is up.
So the 8 weeks, you can either, I guess some clarification, when you're filing for forgiveness, you can either use an 8-week or a 24-week period. So the 8 weeks only matters for you, under the recent changes if you are going to use that period. And, maybe some people want to do that because they want to get their forgiveness done faster. They have larger companies maybe where they could spend this all in 8 weeks quite easily. and that's fine. I think for most, self-employed individuals, sole proprietors, et cetera, single member LLCs, you'll probably want to use the 24-week period. And this gets back to kind of my first answer to the first question. What is that the amount that you're allowed to pay yourself over 24 weeks is still somewhat unknown. It was based on, the max was based on an 8-week convention previously. So it stands to reason that it will now be based on a 24-week convention. However, you can pay yourself throughout a 24-week period. I think what I'm talking about is more just how much you can pay yourself in total. Again, it would seem extremely unfair to let larger businesses with W-2 employees take advantage of a 24-week period as the basis for the max they can pay out to people, but limit that to a lesser amount for sole props and other self-employed individuals. So I think it's reasonable to assume that you'll be able to pay yourself, the equivalent of 24 weeks of 2019 pay or 24 weeks of 100,000 run rate pay over this 24-week period.
Thanks. We have another question about sole proprietors. This person asks, when would a sole proprietor recognize the owner replacement income? When the loan disperses or when they write themselves a check? And secondly, can you wait until PUA is over to write yourself a check in order to delay the income?
Okay, so a couple of questions there. Yes, or on the pandemic unemployment assistance, the PUA. Yes, since you have 24 weeks to spend the money, you want to make sure you spend enough of it on payroll or spend all of it, to get the whole thing 100% forgiven. But there's no specific guidance on when in that 24-week period you have to spend it. So therefore, you could continue to kind of take your PUA, and then when that expires, start paying yourself from PPP funds. I think the point of the whole 24-week lengthening was to give people more flexibility to do things like this. As far as, I guess, the first part of the question, how should you pay yourself? Or I guess could you repeat the first part again, Shannon? I don't want to misremember it.
The first part of the question was, when would a sole proprietor recognize the owner replacement income?
Yeah, so owner replacement income, I think what they're saying is just when you pay yourself for revenue you're not earning. And it's in terms of recognition, you would recognize it when it actually is paid to you. So if that's, the prior example in the first question, if you have a business bank account and you're transferring it to your personal account, you recognize it then as, your compensation. When you receive the loan, essentially, that's just a liability now you have on your books, and you receive, the cash on one hand and then this loan on the other hand. Then later, when it's forgiven, that loan essentially converts to revenue. But until then, you wouldn't recognize your own income until it's actually paid to you, which is why it's important to have some sort of mechanism for paying yourself or showing that you're paying yourself outside of just receiving that loan. I guess theoretically, it's possible that, the day you receive it, you then, if it's in the one account you have, you could say you just paid it all to yourself. That seems to be in direct contrast, though, with the concept of this timing with the PUA, where you'd want to then wait till after that to quote unquote pay yourself.
This next question is from a participant who would like some clarity on rehiring employees. They want to clarify when they have to rehire to pre-COVID numbers. Is it by June 30th or by December 31st, since they do not have enough work to rehire yet?
So it's December 31st. So the way the FTE calculation, or full-time equivalent employees, counts, is basically you are taking your average FTEs during the covered period, the 24 weeks, and basically dividing that by, your FTEs in one of the two reference periods, or another period if you're a seasonal employer. And that gives you, a quotient. So if I had like 10 employees in my, February 15th to June 15th, 2019 period, and then I had 9 employees average over my 24 weeks, that would be 9 divided by 10, and I would only be eligible for 90% of their forgiveness amount. What the 1231, which was formerly 630, says is kind of a separate thing. It's like a short circuit to that rule, which is what they call a safe harbor. which is like if I maybe am facing a penalty for that due to the average calculation, meaning maybe I went down in my employee count, but then bumped it back up, my average might still be low. If you at 12/31/20 are at the same employees, and by employees I mean FTEs, how it's defined by the SBA, which is it's basically a 40-hour work week to be a full-time equivalent. If you're at the same level at 12/31/20 as you were on February 15th, 20, then that other rule I just mentioned, that average calculation, goes out the window and you get 100%, or you don't get that kind of negative rule applied to your forgiveness amount. You'd still have to spend all of your money on 100% forgivable, items like payroll, but you wouldn't be dinged even if your average was lower by raising those totals back up. So essentially there's like two calculations. There's the average calculation, which determines your potential penalty. And then there's this test of, did you recover your FTEs by 12/31? And if you do, then you won't be penalized.
Great. We do have a follow-up question about rehiring employees. This
Sure.
business owner's team does not want to come back until after their ability to receive the $600 per week is up on unemployment. They want to know what they can do if their team doesn't want to come back, and whether they have any options if they are unable to hire to replace them quickly.
Yeah, so in the FTE like penalty calculations, there are some carve outs for circumstances just as this question mentioned, where if I in my average reference period had 10 employees and I've now gone down to 6 employees and I try to make 4 hires, whether that's bringing back people that were furloughed or laid off, or whether that's actually just making new hires for those positions. If you are unable to make those hires or people are unable to come back, then you can demonstrate that and it won't count against you. So, this is a question we've been getting a lot, and I think people are worried about bringing back employees, or employees don't want to take the offer, they want to stay on unemployment or whatever the reason might be. But as long as you have documentation of that, then you will be fine. And what documentation we think could mean in this case, and again, this is hypothesizing because we haven't received exact guidance from the SBA on what guidance or what proof they will take. But I think having things in writing is always best. If you have an employee who you've tried to rehire, then you should have an offer letter or a written offer confirmation to them, and then also a written statement of decline from them, saying no, I don't want this job. Then you can go in your forgiveness application and say, look, I tried to rehire this person, they didn't want to be rehired, I shouldn't be penalized for this. It's a bit unclear about how they'll apply this though, because if with the 24 weeks, if you can't hire that person back, then theoretically you would probably want to hire a different person. If you do hire that person, then fine, you're all good in terms of that safe harbor. But then I think it's unclear a little bit, like what happens if you then try to hire someone else but you can't. It's hard for me to imagine how that would be demonstrated. Not a lot of people are, not everyone I guess is going to be doing a job posting online, and it's even hard to show that, how what date you posted it. So I think keeping internal records on, I laid off this person on 5/30, then I tried to rehire them on 7/1, and here's the documentation where I made them an offer and the documentation of them declining. Then I tried to hire for this role, which is this job description, and it was open from July 20th through September 30th, or whenever that period ends. And you say, okay, I tried to hire for this role, I interviewed 15 candidates and none of them met my standards, so I didn't hire anyone, and then you should be exempt from that penalizing you. It's all a bit unclear and an extra bit of overhead for business owners, but I just think the safer route is to just document everything, keep meticulous records of what you're doing, especially around FTE hiring and replacement.
Great, thanks for reviewing that. Our next question is from a business owner who says, if we did not reduce our FTE and paid employees for 8 weeks, but still have available funds, can we pay for 9 weeks? Are there any circumstances where more than $15,385 is forgivable?
So yes, I mean, again, the exact cap we'll need to see in writing from the SBA soon, but we anticipate that happening. the 8 weeks, this person makes reference to 9 weeks. I mean, the 8 weeks is a choice now. You can do the 8 week forgiveness period, or you can do the 24-week forgiveness period. 24-week forgiveness period is obviously much easier to spend, your full PPP loan, especially if you're, spending it largely on payroll. So I would encourage, those who are wondering, if I'm still thinking about this as an 8-week program, to think about it as a 24-week program, and hopefully we'll get the clarification we need about, what the max you can pay someone is during that period.
Next, we have a question about someone who wants clarification on unemployment. This person asks, if you are on PUA unemployment, can you wait to start the payroll until work starts again, or do you have to get off the PUA unemployment and start payroll now?
So again, I think I hit on this one before. There's no specific guidance on, like, if you receive PPP, do you have to come off the PUA? It's possible. Like, again, I could see something here where the SBA makes a delineation, like if you're receiving it, then you can't double dip. I think it's somewhat safe to, wait till after it's done to start paying yourself. But again, I think on this one specifically, we'll see what the guidance is. But there's nothing as far as I know that says you have to come off PUA like when you receive a PPP loan. So theoretically, the best case would be to retain it. You have your PPP and then pay yourself out of PPP when the PUA is exhausted.
Next up, we have a question from a business owner who asks, with the longer coverage period, can you pay 100% of the loan proceeds to LLC partners as partner distribution pay if under $100,000 per partner?
Yes, the answer is yes. I mean, that kind of income was acceptable, in the application process for PPP loans, and in many cases is the only way that, LLC members or owners pay themselves. So as long as you stay under that annualized cap, then yes, you should be able to pay yourselves that way.
Great. This next question is about applying for a PPP loan. This participant is a Lyft driver and wants to know whether they can get a loan based on their 2019 income, and if so, how do they apply?
Yes, if the PPP program is still open. There's around $100 billion in it still. This person is a self-employed individual, it sounds like, where they have income through 1099s from Lyft. And you can take that documentation and apply to, you can go to fundera.com/PPP and apply. And we've had people, getting funded in less than 24 hours. So it's definitely still open, and you are eligible because that you count as a self-employed individual under that definition as a Lyft driver.
Great. In a similar thread, our next question is from someone who would like to clarify what exactly is the PPP forgiveness criteria for independent contractors?
So for independent contractors, which is essentially a sole proprietor in most cases, or if maybe you file a slightly different way, the forgiveness criteria are the same as everyone else mostly. There's the concept of, I'll kind of use these slides a little bit. There's the concept of what is forgivable, which is just to reiterate for everybody, this is payroll costs, which consist of cash, wages, and various types of compensation, including severance, bonuses, hazard pay, sick leave, etc., plus other payroll non-cash expenses, which are employer-paid health insurance and retirement contributions. These are not employee deductions, plus state and local taxes paid by the employer. So that's one bucket that be included in PPP. And then this other bucket includes mortgage payments or mortgage interest payments, rent, utilities, interest payments on debt before February 15th, and refinancing an SBA EIDL loan. If you spend your money using these buckets, you can adhere to the 60% has to be spent on payroll costs. Then you can get full forgiveness. There are some things I mentioned before, which are potential reductions based on your FTE levels, potential reductions based on your salary or hourly wage rates, but those all come together to say, you know, spend as much as you can on these buckets and try to minimize the other kind of reductions.
Next, we have a question from a participant whose landlord allowed them a 1-month deferral on their April rent. In May, their PPP had kicked in, and then they paid off April's rent along with May and June. Their question is, does April's rent count as an allowed expense because of the rent deferral?
So a deferral is somewhat unclear to me. There was an example that's been given by the SBA that generally you can do something like that, but the example that they gave was slightly different. What they basically said was, you know, say you pay your rent on the 5th of every month, and you got your loan on, you know, say May 2nd. And so, you know, your April rent would be due on the 5th of May, and that's within your loan period. They specifically called out and said, yes, you can include that amount from the previous month, you know, in that current covered period. Plus, then you can also pay June's and July's. So you can actually, you know, fit 3 months rent inside of this 8-week period. They didn't specifically say that if it's a deferral from like 2 months back. So in that case, I don't know if you did like, you know, in that example, if you paid May's rent, but you had deferred April's and then you paid that. I'm not quite sure how that would work. I know you can reach one period back, but I'm not sure how the exact timing falls for this, the person who asked this question. But generally the standard is paid or incurred, and paid, you know, from a previous period is allowed. My general guidance here would be that was more relevant when we were trying to fit, you know, as many of these, you know, if you're going for forgiveness, you would try to fit as many of these costs into the 8-week period as possible. But now with the 24-week period, you know, you might not need to even bother with that, including that April rent, because you'll have, you know, July, August, September, October rent potentially, which is enough, hopefully, cost plus all the payroll and other costs to get you to 100% forgiveness. I think if you do all that and still find that you'll need to have this expense included to get to full forgiveness, then it's something, you know, I'd look carefully at the dates and how the SBA words their next application when they give examples of non-payroll forgivable expenses.
Thanks for going over that, Justin. Our next question is from a participant who wants clarity on whether their year-to-date 2020 earnings factor into forgiveness at all.
So their year-to-date earnings don't factor in if you're thinking about like what you can pay yourself during your 24-week period. You know, the max limits are, well, let me retract that. So their year-to-date earnings do matter, you know, in terms of like what your annualized or your annual pay is. Like you can't exceed this rate of $100,000. And if you've already paid yourself a substantial amount, then that will cap out earlier in terms of what you can pay yourself for PPP, since they are capped at 100. Otherwise, it doesn't really impact anything besides the fact that, you know, your year-to-date earnings, some of that, if you've already received a PPP loan, will be included in your forgiveness amount. But other than that, no, it doesn't have as much bearing. Like the, you know, 2019 was used for, or last 12 months was used to calculate the loan amount when you got it. So it's not a huge deal, not something I would focus on, except for those couple things.
Great. Our next question is about forgivable expenses. Could you please provide guidance on what transportation costs are forgivable?
I wish I could, but I have not seen anything other than what I'm showing on this slide right now from the SBA, which essentially just lists transportation. I think that, you know, thinking about it logically, what that could include, I mean, potentially a car lease that you use specifically for work. You know, that's kind of the first thing that comes to mind. I'm not sure what else maybe could be included. Hard to say. They haven't really expanded on this more. I haven't gone into that one in depth and tried to, you know, Google kind of what others are interpreting it as. I think there's a lot of people kind of looking at this. So I'd encourage, maybe see what you can find on the internet here. There's different lawyers and accountants that have looked into some of these categories very much in depth, especially when a lot of them can be considered kind of how they're considered for tax purposes. So I would do a little Googling there. I haven't specifically gone into what exactly that is, so I apologize there.
Great, thanks for answering those questions. Unfortunately, we are coming up on time, but for any questions we didn't get to, we'll record them for next week. And please remember, you can also submit questions ahead of time using the Google form. You can also reach out to our team on Twitter or support@fundera.com in the meantime. Please keep an eye out for the webinar recap email today, which will include additional resources for you, including the slide and recording. Thank you again to everyone who joined us today, and we hope to see you again back on Thursday.